this shows specifically the supply shortage. So this is a actual shipping days of supply and inventory. You can see in October is very low, and the impacts of extended lead times are really starting to impact all of our business sectors and many companies due to the supply shortage. Demand is a key factor in that. However, the COVID-19 impact still looms in our industry.
Segment. And I can tell you that the situation of the economy, not only in Brazil, but also in other countries in South America is becoming much better. So I think that we intended to have more suppliers in the next year. Nowadays, we have around 100 suppliers in Asia, Turkey, and Russia, Ukraine. So we intended to increase more.
Decarbonization to stop climate change will influence all steel using segments in the coming decade. The Sustainable Europe Investment Plan, which is one of the pillars of the Green Deal, will boost sustainable projects such as renewable energy generation and other needed infrastructure. So decarbonization, for example, in power generation and energy-intensive industries like steel, cement, is driving demand for green electricity. So boosting also the demand for renewables like solar and wind, which will continue to grow drastically. In construction,
Iran. So today, what I assume by the end of the year, we'll be producing more or less like 36 or 37 million tons, which was 34 last year. The export is going to be somewhere around 20 million tons as usual, although in 2018 we had a total production of 37 million tons and close to 22 million tons of export. So what I'm trying to say, although we had a positive growth this year compared to 2019, but still we are behind what we had achieved in 2018, simply because two reasons. Number one, locally, since 2018, we're struggling with some financial issues, especially on the foreign currency side. Still today is trouble for Turkey. That's putting negative pressure on demand, internal. Number two, of course, the international market, especially because of protectionism. We've been having great issues in our two biggest markets, namely US and Europe, which still is going on.
And we find because of this huge auto demand in the country, the CRCA, the CR prices are more than the galvanized. And this correction is going to happen where galvanized is going to catch up with the CRCA this month or maybe in the next month. We have seen that the Indian export of hot roll coils to Europe is about $730, and the prices in Europe of hot roll coils is about 650 euros or so. Now this translates to Indian rupees about 51 to 52,000 rupees. So the current HRC prices, hot roll prices in the country is about 48, 47, 48 or so. So which is an increase of about $60 to $70 over last month. So this month we had an increase in hot roll prices of $60 to $70 compared to last month, but still there is a scope for another $30 to $40 increase to match up with the international prices.
So I've divided the production and consumption into two. You have rest of the world and you have China. If you look at just rest of the world, crude steel production is down by 14%. If you look at the consumption, it's also down by 14%. When you look at Chinese crude steel production is up by 7%, whereas the finished steel consumption is up by 9%. Looking at these numbers, you would think the world is quite balanced and it should have been status quo. But if you look, the word crude is very important and finished. China has been importing significant amount of semi-finished goods as well as base materials.
As for Egypt, Egypt has shown, good resilience against this COVID-19. If we look at, the reserves, it dropped somehow in the Q2 and Q3, but then it recovered again, and it's now at $39 billion. The exchange rate, the Egyptian pound was even appreciating against the dollars, and with the standing now at 15.7. The interest rate dropped a lot in Egypt, and it's now at 9.25%, which is very healthy for the industry and for the consumers. The inflation also is lying at 4.5% on a monthly basis, year to year.
Take on it.
Honestly, I agree with the word or describing as a panic, because the prices are going up so fast that people intend to take more positions. The demand also increases artificially, so it has to calm down a little bit. I mean, it's hard to describe where the bottleneck is, but what I know, because of this indifferences between different geographies, there might be some shortage for some other raw material. Just to give you an example, today hot rolled coil are being sold at $850 short ton. It's going to hit 900 short ton very soon in the US. That's in metric terms more or less $1,000. Where the same material are being sold in Europe for $750, in Turkey is $690, in China is still $600. So, and as you know, these two markets are protected. So it means the domestic mills in Europe or US is going to be, or will be encouraged to pay higher prices to raw material, which in fact are also the main suppliers of scrap.
In Brazil. So the credit line is very important. And as you said, the price, of course, is really critical for Brazil. Now, if you look, the Brazilian mills, they are increasing the price a lot. Every month, they are increasing the price. And this is good news for us, because we are trading, so we are increasing our exports to Brazil. But anyway, it's very important to consider that the first point for the customers is the credit. The second point is the price. And the third point is the quality.
After that, the stock levels of the finished products were high. By the time, mills were not able having a quick working capital or a quick cash flow. So most mills run underutilization. And by the time impact only the stock levels of the finished products reduced. Now we would like to get the best use of this uptrend, but then the raw materials are challenging. Domestic scrap is very small quantity, and we do have mills who are running on DRI based, but then with the oxide billet or the iron ore shortage, they are also in to have more scrap. So I guess this is a really critical situation in my opinion, and I do believe that Egypt might really facing some shortage here or there. The only issue that is hindering this shortage to appear till now is that the cash flow is not supporting. There is some demand here or there, but because of the cash flow issues and the challenges with cash flow, we do not see big demand. The moment we have some easiness in this cash flow issue, definitely Egypt will go in shortage.
Is not so much of a concern for us. What is more a concern is the local government of India, companies, iron ore producers and all, they have increased the price quite drastically. So that is, creating a bit of a concern. However, there is a welcome movement towards sort of not exporting iron ore and pellets. So that is going to increase the availability of iron ore in the country. And let me tell you one thing, that the Indian prices and demand are in fact better than the pre-COVID times as well now. So the prices are better and even the demand has come. So we expect almost all the mills are running to 80 to 85% capacity utilization, and it's a glorious future for steel in India. And the only concern is the raw material prices.
UAE has bounced back quite fast from COVID. I'm not saying necessarily in a steel sense, but I'm saying overall. Government has been very strict and swift actions been taken. And you will see that as the vaccines come in, UAE will be one of the first countries to vaccinate most of their population, which should result in quite a bit of activity That's how I would think.
We're still seeing the effects of the second, or there's question marks, but there'll be a third wave coming. So it's a bit of there's an uncertainty, I think, in the market. But the vaccine will definitely, it will definitely bring positive, demand. So far, we see many segments are forecasting increased demand into the new year. Agriculture, if you look at the forecast from Eurofer, basically all segments will be recovering to a certain extent next year. But the question of, we will not go back to these pre-COVID levels, apparently. So now, for me, the question mark is, what is a new normal? Are we going to be seeing a new level of demand?